Good morning, traders. This is Sam, the Trader Geek, with your Sunday morning, November 16th, 2025 market review and preview. Hope you're having a great weekend, and we're taking a look at the indices, and we could see that it was not a bad red day, except for the Dow Jones Industrial Average up 40 basis points, and S&P up just fractionally 14 basis points. Everything was kind of down in the red, but definitely all in the red for the monthly to date, half month through November. And then in the quarter, we're starting to see some negativity crawl in for the micro caps and mid caps, and of course the Russell 2000 small caps. So not not a stellar start to the quarter, but not a bad one either. But all of the indices are in the green for the year, with the mid cap surprisingly really lagging this year. So I'm not sure what's going on there, but there you have it. If we take a look at where we are as of the November 14th close, and this is courtesy of the Kirk report, Dow Jones down about 2.5% from the high, whereas the microcaps are already, which were looking really promising earlier this fall, are now kind of the laggards at down 8.72% from their high, and the small caps down 6.41%, and mid caps down 5% from their highs. And the most resilient of them is the Dow so far, and the SPY down only 2.29% from their peak. If we head on and take a look at what happened in the sectors last week, mixed bag, with healthcare really doing well and showing relative strength, up 10.37% on the year and 4% last week. Energy getting a little boost last week, up 2.77%, with materials still kind of in the basement of all the sectors, but for the staples and the real estate sectors. But we had a lot of negatives, so like a mixed bag, half and half, with consumer discretionary on the backs of Tesla and Amazon giving back some last week, down 2%. And for the half month, the worst of them is technology. But they're still up 24% on the year. And staples, as you can see, is the only negative sector year to date, with real estate really just eking out a 70 basis point gain on the year. So everything else is, one way or another, just up, and technology is by far the leader, along with communications and industrials and utilities being kind of more than 15% up on the year. If we take a look at and glance at some of the industries, you're seeing a lot more red creep into the quarter, right? And for the week, drugs and gold miners bouncing back, with biotech showing strength, up 24%. I mean, that was after being a laggard most of the year, coming back and pretty impressive. Exploration and production up 3.5%, just eking out a gain on the year. Food and beverage, along with those staples, just really stinking up the joint, down 5% on the year. And we can also see software, which is very surprising given the strength in tech, down 2% on the year. So I guess this isn't the software eating the world just yet. Cannabis is back to its losing ways, losing 20% this week, and sending it deep into the red for the year. So mixed bag here, but not much strength last week, despite a very strong start to the week, and kind of faded towards the end of the week on hopes of interest rate cut in December being dashed. Taking a look at kind of the style of investing, the only one to eke out a gain was large cap value, and same for the month, which is again half month old, eking out a gain. The rest negative, with large cap growth really taking it on the chin, although it is still the big leader by far over the year-to-date basis, and then large cap value. So large is still where it's at, and small cap growth on a quarterly basis, almost down 3%. And but for the small cap value, it is in the basement of year-to-date performance. Taking a look at the top 10 winners and the top 10 losers, drugs and gold miners and lithium last week, the outperformers, and cannabis and the Solana ETF, along with the Destiny Tech 100. These are some of the IPO and pre-IPO stuff. Just this thing just really goes south when the market has any weakness at all. Ethereum and Bitcoin, as you see here, have just not having a year. Bitcoin is on the verge of giving up all its gains for the year. We look at the Magnificent Seven, and Microsoft and Apple and NVIDIA, 3 out of the 7 eking out a gain, but Tesla really giving back quite a bit, along with Amazon after that great earnings report and earnings reaction, down 4%. Meta continuing its weak ways, and you can see that it's down to a 4% gain on the year, and Tesla bordering back on going negative again. So this is a volatile one for sure. And Alphabet taking the lead over NVIDIA, and news late on Friday coming out that Berkshire Hathaway taking a nice stake in Google. So that one should be up pre-market on Monday. And NVIDIA now has to settle for a second place as it reports earnings this coming Wednesday after the close. Crypto, sea of red. I mean, look at that. Bitcoin, 0.81% year to date. BNB, this one is kind of bucking the trend, and XRP still up 9.39, but you can see that weekly, monthly, quarter, everything is red in crypto land. So we need to see this bounce back to get a sign that the risk is back on for the markets. We'll come back to these economic reports. We'll take a look at the charts, and as you know, I like to walk through the daily, weekly, and the monthly charts. And we'll start with the daily. You can see what we did last week. We went up and then we went back down. So it was like a round trip, but we didn't quite take out the previous Friday's low, which is a good thing. And but it looked like we were heading back to all-time highs, honestly, on Wednesday. But we ended up forming a bit of a lower high. So what do we have so far? Do we have a downtrend? We have high to low, back to lower high, and now if we get a lower low, then we have the definition of a downtrend. The parabolic stop and reverse did flip to negative, although stop is still intact. And this dotted line here is an ATR trailing stop. So we're right in the middle of this 50-day, this blue line here. So we'll see what happens comes Monday, but definitely the picture is changing on a daily basis. As you can see, the MACD tried to flip back positive, but did not do so. But we'll see. Every MACD signal in the last 6 months almost has been negated. Will this one also be negated? We shall see. Here we are on the weekly chart. You see the MACD starting to flip negative. We're just under the overbought area on the RSI. And here we are. Did we undercut last week's low, 66.31? No, we didn't undercut last week's low. So we did stop one time framing the week before, but we have not taken out last week's low. So 66.31 on a closing basis, if we take that out, which happens to be where the parabolic stop and reverse is on the weekly time frame. So we closed inside the options implied expected move, as you can see here. So, but we did meander all the way to the top of the expected move, and We visited close to the bottom of it. So big wide range last week. We had a 123 point expected move, and we'll take a look at what the expected move is for this coming week. So consolidation still going sideways, still a bullish chart, but you know, anything can happen. Flipping to the monthly chart, you can see that obviously after a nice uptrend, we're getting a little bit of a rest here. Still an inside candle versus last month, so nothing violated on a monthly basis. MACD still solidly positive, and we are still overbought on the RSI on a monthly basis. So my guess is that we could pull back, and we see RSI bounce off the 70 level, and if that's the case, then our year-end rally would kind of be secured. Gotta put out a tweet like that, but anyway, still solidly positive. Nothing wrong with this picture, although we were due for a rest and we're getting one now. Let's take a look at the NASDAQ. NASDAQ, not quite as good looking as the S&P, but here we are. So this candle here is the Friday before the last one. We rallied, and we came right back down. This one actually violated last Friday's low. So that one's 24,603. And I think pre-market, we were at 24,535. Though we had a nice close, and we are on the 50 line as well, the 50-day line. MACD solidly negative, although still above the 0 line. And we're still close to the neutral level on the RSI, neutral level being around 50. Looking at the weekly, we did take out last week's low, but we closed above it. So we had 24,534 versus the prior week, 24,603. So yeah, we violated that low on an intraday basis, but I guess you could say that's also 25,059. Yeah, I guess we violated it on a closing basis as well. So that's not good. 26,182, our all-time high. Again, we stayed inside the options implied expected move, although we touched both edges of it, holding on to the 8 EMA. MACD looking to go negative, and RSI is still strong at 63. Could use a little bit more deflation. Looking at the monthly, an inside month still. I don't think we violated no, we didn't violate the prior week low. Still looks good. Solid uptrend. MACD is solid. Still overbought on the monthly. And again, this one I would expect to also bounce off the 70 RSI level. We'll see what happens. Switching to the Russell 2000. This one's the weakest of them all. Of course, we have interest rates inching up a little bit, and we also have talks of and less odds for a rate cut in December. MACD solidly negative here, and now under the 0 line, and we're still not really oversold on the SI, oversold level being at the 30, but certainly inching down that way. Kind of bouncing off the 100-day, if you could call it that. But Friday, again, opening lower, closing in the upper end of its range for the day. Definitely one time framing lower on the weekly chart, and one time framing just means that the lows of each week are lower than the prior one. So when you're down one time framing to the downside, it means that you're making lower lows on those candles, as we are, of course, on the daily charts. Chandelier is still positive. Chandelier is a volatility stop, as is the PSAR. We violated the PSAR a couple weeks ago, and we're still not seeing any relative strength. On the monthly, we also took out last month's candle. And did we violate the prior month, 23.29? And no, we didn't violate. 23.45 is the low on last week's candle. So we violated last month, but we didn't take out 2 months low. MACD is still positive. And of course, since this is a monthly chart, we do tend to move a bit slower. RSI never got overbought on the small caps, never got even close to 70. And now we're inching back down to the neutral level of 50. Taking a look at the expected move for next week. This is an options expiration, a monthly options expiration. And we have the SPX up here. And therefore, we want to look at the PM expiration for the expected move. And we have about 145 points. Obviously, we have higher volatility, and therefore we're going to see a higher expected move. So 145 in 2 weeks. That's a lot of points, guys. And we were moving 100 plus points a day last week. So I continue to be a buyer of short-term options rather than a seller. At least the odds say that that's what you should be, especially with all the volatility in the fits and starts and false starts. It's just been a little bit unusual trading environment, at least so far in November and for part of October as well. So 145 points expected move. Taking a look at the VIX, and we'll go to the chart first. Maximize that. It helps if I type it correctly. Yeah, there we go. So what happened on Friday? We got up to the 23 level and backed off. And so far, I was looking for a close above 21 to have more bearish implications. And we closed just before below the 21 level. The significance of the 21 level is basically a prior spike at that level that we had a closing level on, and we didn't quite get it, but you can see that the MACD is positive on the VIX, but definitely closing on the lows on Friday as we got from the 23 level and closed at the 20.92. But make no mistake about it, if we take a look at the VVIX, which is the volatility of the volatility, we got as high as about 116.99, not quite 117. And you see here a PSAR dot that it didn't quite take out. If it had closed at 117 or higher, we might have taken this out. And VVIX is the volatility of the volatility, and it kind of measures institutional support for buying hedges and volatility. So we're not quite over the 110 level, but we're definitely over the 100 level where it bears a bit of attention. But we just can't seem to, the bears can't seem to catch any real traction to get two up candles in a row. I mean, back here we saw several green candles, and obviously this is the VVIX. If we take a look at the VIX options, as I do each time, we have a VIX expiration or a VIX contract expiring on Wednesday morning, and therefore we have a VIX contract expiring on VIX options expiring on Tuesday. They expire on Tuesday, and they stop trading after the close, and then they settle on Wednesday morning based on where the VIX is at the open. So we closed at 1983, let's call it 20. And so if we look at the 21 calls, they're pricing out at about, call it 68 cents. And if we go $1 out of the money on the puts, those are trading at about 38 cents. So almost 2x on the calls, but you know, the bears have the edge, or the bulls on the VIX have the edge, if you want to think of it that way. But not by much. 2 times is not that much. But I want to take a look and see. I suspect we have the same situation with the next monthly expiration, which comes up in about 30 days. And if we go out to the 21 calls, then those are pricing at about 203. And if we go to the 19 puts, and those are pricing out at about $1.14. So definitely not 2x. So the slight advantage goes to the bulls on the VIX, the bears on the market, but this is not a significant factor. So it doesn't tell us a whole lot about what to expect. You know, do we see follow through on Friday's rally or not? Is a question. We'll see what happens on the open. And what I tend to do is kind of take a look at what the cryptocurrencies are doing over the weekend to kind of give me a little idea where futures might open. And last I looked, they were up a bit this morning, and we'll see if that has any follow through to Monday. And this is like I said, an options expiration week. And one of the things I also like to look at, because we are approaching an expiration of the VIX contract. So the VIX contract, which basically expires on the open on Wednesday, is at 1990, which is close to the spot VIX rate. And then the December is at 20, the December contract of the VIX futures. Then you have 21, 21.87, 22. So we're seeing the same normal contango, but notice that when you go out to January, February, and March, we're seeing sustained higher volatility. So that's at least a caution sign about people and institutions buying protection. We're not seeing these in the teens or seeing them go higher as you go out, which is generally bullish in the near term, but it doesn't look as bullish for early next year in terms of seeing volatility. So keep that in the back of your mind. If we take a look at what we have in terms of now that the government is reopened, the economic calendar, thanks to Neil, whoever put this together, assuming that we get the normal economic reports now that the government is reopened, we might have Empire State Manufacturing. Well, that's not a government report. Basically, on Wednesdays where things start, where we get the FOMC minutes released, Philadelphia Fed. Thursday should be the weekly jobs report. This is saying non-farm payrolls, maybe for October, will finally be released on the 20th. We shall see. Flash PMI on Friday, University of Michigan confidence, and real earnings, inflation adjusted wage data. So we shall see whether these come out based on whether the government reports are released in time. Kind of wrapping up earnings season, but still, this is what I call retail week in the reporting department, because we typically we have Home Depot, and I'm sure Lowe's is in here, Target, TJX, Walmart, Gap, you name it, all of these retailers reporting this week with a lot of names that most traders hardly look at. BJ's on Friday, another retailer. So we're starting to wrap down things into it on the afternoon. There's another retailer, Ross. So you can see here that the bulk of the reporting for earnings season has passed, and it's been quite a good earnings season for most of the companies. And of course, when you keep slashing guidance, it's easy to hit above your expectations when you keep lowering them. And that's kind of the game that they play with earnings. In any case, should be an interesting week. Typically, options expiration in November tends to lean positive. Again, seasonality has not really shown its significance in the last few months. So not sure why it would this week, but options definitely have some effect on things. Saying that in a somewhat obvious way, but I think that the tone is starting to change in the market. So it's not as easy as it used to be, and it's been that way for several weeks. And I would say that as always, be careful and don't assume that the market is going to rescue you. Be less forgiving with your positions at this point, because there are some stocks that are down 50, 60, 70%. Look at some of the quantum stocks, look at some of the nuclear stocks, some of the uranium stocks. They're just really getting hurt, and some of these shouldn't be held on to because they may or may not come back. But this is an environment where if you're taking a trade, take your profits and run, because it's quickly turning into from buy the dip to sell the rip. And I don't want to see anybody get hurt on this. In any case, I appreciate you tuning in and watching. Tell your friends about it. And I will see you next week. Have a great trading week and rest of your Sunday. And I will see you again soon. Take care. This is Trader Geek Sam. Talk to you later.